Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks. I have two paper money trades for you today on two high-profile names. First, we'll look at Palantir, a stock that has been all over the news lately and all over social media. And then we'll look at Supermicro, two names that are really moving in today's markets. First, let's get to Palantir. Now, if you look, Palantir's come down off its recent highs of $125. It's down almost 18% in the last month on potential cuts in government in defense spending is the news that caused Palantir to sell off. But it is hitting a 50-day moving average at around 86.90. It's just below that right now. That's what we're going to look at here. We're going to look at a complex trade where we sell a downside put vertical. I'm going out to the March 14th, so I'm going to go out to next week, selling the 75.70 put vertical, using that credit to buy the March 21st, March 14th, 95 call calendar. So selling a put vertical, buying a call calendar, two neutral to bullish trades combined to make one complex trade. Now the debit on this is about 30 cents. Actually, it's trading about 25 cents now, so a little bit less. Here's the thing, the risk is not the debit paid on this trade. The risk is the width of the put vertical, in this case $5, plus the debit paid. So if it's 30 cents, it's $530. If it's 25 cents, it's $525. But you're looking for a move towards that $95 strike, a rally of about $10, and you're short the 75 put $10 below the market. That's about the move for the next week in Palantir, about $9.90. So we used that right column on the Thinkorswim platform to set our strike. So selling the 75.70 put vertical in the March 14th expiration, buying the March 21st, March 14th, 95 call calendar. So a complex trade in Palantir. Now let's get to our second one, and that is Supermicro. Now Supermicro, if you've noticed, it tends to move along with a stock that it's related to, which is NVIDIA. So both those stocks have sold off recently, even though Supermicro has rallied off its recent lows with some of its news-related problems that it's had. So in Supermicro, we're putting on a March 28th, March 14th, 40-45 call diagonal. So buying the March 28th, 40 call, selling the March 14th, next week's 45 call. That was trading about $2.85. Now it's trading about $2.99, almost $3. So Supermicro has rallied ever so slightly from when we looked at this earlier today. So if it's $3, you've got a $5 call diagonal on. Whatever you spend, the debit paid on this trade is the risk on the trade. And this one, because it's a two-weeker, because it's a March 28th, March 14th, you do have the opportunity to extend duration on this trade, thus chipping away at the net debit, then thus chipping away at the break-even price. So the risk on the Palantir trade is the width of the short put vertical plus the debit. The risk on the Supermicro trade is the debit paid on this trade. So two trades, both risk defined, but two different versions of bullish trades in terms of Palantir and Supermicro. That's our show for today. I'll see you again tomorrow with another edition of the Daily Trader. I'm Kevin Hincks.